What if I told you one of the world's strongest companies is trading at its cheapest valuation in years? Microsoft has created enormous wealth for investors since its IPO, turning small investments into millions. Over the years, it has become a symbol of stability, innovation, and long-term growth in the tech world. Yet in 2026, despite leading the AI revolution, the stock has experienced significant pressure because investors are worried about massive AI spending and slowing cloud growth. Some people are even questioning whether the growth story is slowing down, or if this is just a temporary phase before the next big expansion. But the real question is deeper than that. Is Microsoft actually weakening? Or is the market simply misunderstanding the scale of what Microsoft is building right now? Today we'll look at Microsoft's IPO price and historical returns. Why the stock is under pressure. Azure, AI, and future business growth. Whether this is a buying opportunity. My realistic future price expectations. Microsoft's amazing journey. Microsoft went public in 1986 at a split-adjusted price of just a few cents per share. At that time, very few people could imagine that this small software company would one day become one of the most valuable companies in the world. Over the next 4 decades, Microsoft continuously evolved with every technology shift, from personal computers to the internet era, and now into cloud computing and artificial intelligence. Today, Microsoft owns Windows Office 365, Azure Cloud, LinkedIn GitHub, Xbox Activision Blizzard. Each of these products alone could be considered a major business, but together they form one of the strongest technology ecosystems ever created. And perhaps most importantly, Microsoft is one of the biggest beneficiaries of artificial intelligence through Azure and Copilot, which are now being integrated into almost every part of its ecosystem. A $10,000 investment near the IPO would be worth millions today, showing the power of long-term compounding in a company like Microsoft. Why has Microsoft stock fallen? Many investors are asking, if Microsoft is so strong, why is the stock down? The answer is not that the business is collapsing. Instead, it is about expectations and short-term uncertainty. Microsoft is spending enormous amounts of money building AI infrastructure and data centers. These investments are massive and happening at a speed the market has not fully adjusted to yet. Investors worry that AI costs are rising rapidly. Azure growth has slowed slightly compared to previous years. It may take years before all this spending generates maximum profits. Competition in AI is also increasing globally. This fear caused a major sell-off earlier in 2026. However, history shows that Microsoft has gone through similar phases before, where heavy investment first scared investors but later created massive long-term growth. Many analysts believe the market may be focusing too much on short-term costs and not enough on long-term opportunities that AI could unlock. Why Microsoft's future still looks strong. Microsoft's future depends on 3 massive businesses that are deeply interconnected. 1. Azure Cloud. Azure is Microsoft's cloud platform and competes directly with Amazon AWS. Businesses around the world use Azure to run applications, databases, and increasingly, AI systems. In many cases, companies are not just using Azure for storage anymore. They are building entire AI-powered products on it. Azure continues growing strongly and remains one of Microsoft's biggest revenue drivers. 2. Artificial intelligence. Microsoft invested heavily in AI and integrated AI tools across its ecosystem. Examples include Microsoft Copilot, GitHub Copilot, Azure AI services. These tools are not just features, they are becoming productivity engines for millions of users and developers worldwide. Management has indicated that Microsoft's AI business has already reached a multi-billion-dollar annual run rate and continues growing rapidly, especially as more enterprises adopt AI into daily workflows. 3. Enterprise software. Microsoft Office remains deeply embedded in businesses worldwide. From Word to Excel to Teams, Microsoft controls the backbone of enterprise productivity. Now, when companies adopt AI tools, they are naturally moving toward Microsoft's ecosystem because everything is already connected. Office, cloud, security, and AI in one place. This creates a powerful ecosystem advantage that is very difficult for competitors to break. Is Microsoft cheap today? Many analysts believe Microsoft is currently trading at one of its most attractive forward valuation levels in several years. The market is worried about AI spending data center costs margin pressure. But when you look deeper, Microsoft's core business remains extremely profitable and highly stable. Revenue continues growing. Cloud demand continues growing. AI demand continues growing. In other words, the foundation is not weakening. It is expanding. And this is something many retail investors often misunderstand. When a company like Microsoft starts spending heavily on future technologies like artificial intelligence, cloud infrastructure, and data centers, it can temporarily look like pressure on the financials. But in reality, it is often the opposite of weakness. It is preparation for the next phase of growth. That is why many long-term investors view current weakness not as a warning sign, but as a potential opportunity phase in the stock's long-term cycle. Because history has repeatedly shown that Microsoft does not grow in a straight line. It grows in cycles of expansion, investment, and then massive value creation once those investments start paying off. Future price prediction. Nobody knows the exact future price of Microsoft, and anyone claiming certainty is guessing. The stock market is influenced by thousands of factors, including interest rates, global demand, competition, and especially investor sentiment. Even the strongest companies can experience volatility in the short term. However, we can still break it into realistic scenarios based on current trends and business performance. Bear case. If AI spending continues rising aggressively and Azure growth slows further, Microsoft could remain under pressure and trade sideways for an extended period. In this scenario, the market may continue to worry about profit margins and high investment costs, even if revenue keeps growing slowly. Base case. If Azure continues growing steadily and Copilot adoption expands across businesses, Microsoft could return to previous highs and continue compounding at a stable pace. In this case, Microsoft would remain a strong long-term compounder, delivering consistent returns driven by cloud demand and enterprise software dominance. Bull case. If AI becomes as transformative as many expect, Microsoft could emerge as one of the biggest winners globally because it controls the infrastructure, software, and enterprise relationships powering the AI economy. In this scenario, Microsoft would not just be a tech company, but a core layer of global digital infrastructure, benefiting from almost every AI application built on top of its systems. Final thoughts. Microsoft isn't a speculative startup trying to find product-market fit or survive in a competitive early-stage market. It is already a mature global leader with deeply embedded products used by millions of businesses and individuals worldwide. It is one of the strongest businesses ever created in modern history. The company generates massive cash flow, dominates enterprise software, owns a leading cloud platform and is positioning itself at the center of the artificial intelligence revolution. Very few companies in the world have this combination of scale, stability, and future growth potential at the same time. The biggest question isn't whether Microsoft survives. The real question is whether today's fear and uncertainty around AI spending is actually creating one of the biggest long-term opportunities of this decade. And if Microsoft's AI investments succeed at scale, this period may later be remembered as one of the best accumulation phases in its entire history.